Consumer durables company Crompton Greaves Consumer Electricals has delivered a robust performance in Q3 FY20. Let's do a three-point analysis to understand what has led to the stellar performance and what's the outlook going forward as well. 1. Q3 result highlights. Well, revenues for the quarter have actually risen 4% year-on-year to 1,071 crore rupees. Now, sales were definitely impacted by the credit stress in the trade channel and also downbeat retail sales. Now, gross margins have improved, however, 30 basis points year-on-year on the back of richer product mix and easing commodity prices. Cost control measures have also aided the operating margins. Now, EBITDA increased 8% year-on-year this time around. PAT also came in much higher due to the income tax reversals and lower interest expenses. Now, electrical consumer durables revenues have increased 11% year-on-year to 787 crore rupees. Market share gains across fans, geysers, mixer grinders have also aided the top line. Domestic pumps grew 8% in volume terms, but the agricultural pumps was hampered by the tepid rural demand and the adverse weather conditions. EBIT margins also came in higher owing to the higher share of our premium products and the economies of scale. Now, Crompton's market share in the fans category has also improved to 27%. Going forward, the management also intends to scale up the vertical by ramping up its market share in geysers, air coolers and also mixer grinders. Lighting and fixtures disappointed on all fronts. Sales contracted 11% year-on-year and EBIT margins dipped 170 basis points. Volume growth also in LED and battens, that was strong at 15%. However, the price erosion of 8 to 10% year-on-year in the segment had an adverse impact on the top line and margins. 2. What's the outlook going forward then? Well, the Indian consumer durable sector has high dependency on China for key components such as motors, compressors and printed circuit boards. Now, Crompton's Q1 is likely to be impacted by the ongoing shutdown in China as majority of the component manufacturers are yet to resume production. Now, while the production is anticipated to resume by February end, subsequent delays could disrupt the supply chain of the entire sector and have a material impact on the top line and margins of Crompton Greaves beyond April to June quarter. Now, the near-term growth would also be challenging due to the supply chain disruptions, aggressive competition, and also the lackluster consumer spending. But the government investment towards infrastructure and schemes such as Housing for All will definitely continue to propel the development of the sector in the long run. 3. What should investors do then? Well, despite the soft consumption trends, the long-term growth story of Crompton Consumer, 36.1 times FY21 estimated price earnings, definitely remains intact. Now, long-term investors should definitely make use of any dips in the stock price to gradually build in positions in the stock.